Thanks everybody for being here today, and definitely concur with Joe in terms of his contrarian view on the shift to critical metals and batteries. I think it's going to take a lot longer than most people think, and we're in the PGM space, which really relies on the traditional car market for demand. So if you think about the catalytic converter in your gasoline or diesel car, that's where most of these metals go, and we're actually seeing a lack of investment in new production for these metals. And I think when people realize that we're going to be driving gasoline or hybrid cars for a lot longer, that these metals will, there won't be enough of them out there actually when the time comes. We are in South Africa, the Waterberg project. Company's about a $200 million market cap. Our main trading occurs in New York. And as Joe said, we've been working on this project since about 2011 when we first discovered it. I was just down in Florida, in Miami, and the term Tier 1 asset, as Mark Bristow coined it a number of years ago, frankly is overused. According to Mark Bristow, Tier 1 means 10 years of mine life, first quartile of cost, and 500,000 ounces a year of production. Very few projects globally actually meet the Tier 1 definition. Waterberg is truly Tier 1. It's massive. It's 20 million ounces in reserves, palladium, platinum, rhodium, and gold. It has a 45-year mine life just based on those reserves. We haven't even accounted for the M&I and the inferred ounces. And we will be one of the cheapest producers at just over $600 an ounce. So keep that in mind when somebody says Tier 1 next time you see a presentation. The Bushveld complex in South Africa is the home of the vast majority of PGM production. We're on the North Limb, just on strike with Anglo American and Ivanhoe's Platreef project. These assets are different than your traditional PGM mine. They're thick, they're big, and they can be mined mechanized bulk. And that's what makes them low cost relative to the existing production in the older parts of South Africa. Leverage on the project, we're mainly palladium, 63%, with very good platinum, gold, rhodium credits. And we also have a very strong copper nickel credit as well. Very diversified and very geared to the current auto market, auto trends. We are seeing a bit of weakness in the PGM prices currently. Palladium has kind of rolled over from $3,000 where it was a few years ago. And I think what you'll see is as PGM prices likely weaken in this cycle, a lot of the higher cost production in South Africa will start to close. And again, you can see how we plotted our price, our cost in terms of the market. The margins are quite significant even at much lower prices. We're currently in a construction readiness phase. We're spending about $21 million with our partners to get ready for a construction decision. And part of that is the definitive feasibility study update, which is a little bit old at this point from 2019. Ownership of the project, we've got a very interesting ownership structure. We're the majority owner with our local partner in South Africa. Impala Platinum, one of the large integrated companies, purchased 15% interest for $30 million several years ago. And I think the real key to this asset is the Japanese government. So JOGMEC and their corporate partner Hanwha are anchor owners of the asset, and they hold the metal marketing rights for the project. And so we're currently in discussion with the Japanese on project finance. And the key thing that's driving that is the current geopolitics around Russian palladium supply and the fact that the Japanese are self-sanctioning from Russian palladium. So stay tuned for news on the project finance for the project, and I'll talk a little bit about the other pieces of that plan. Quickly on the geology, you can see from the images here, it's a big project, 8.8 kilometers. There's two zones stacked on top of each other. Again, this is all strictly on the M&I. There's a lot more room for this project to grow, and you can see from the plan view. We haven't even touched the northern portion of the project area. And power, obviously, you can see the bulk supply there in the image is an issue in South Africa today. Certainly not helpful. I was just joking with Joe. We were both down in Cape Town, and the lights kept going on and off during the conferences down there. I think that over time it will be remedied. And we don't need full power, full construction power, or full production power for a number of years. but certainly it's something that we're keeping an eye on and looking at alternatives going forward. I talked a little bit about the bulk nature of these deposits. The traditional PGM mine in South Africa is a 2-meter horizon that's essentially mined conventional or by hand. And the Waterberg is a 100-meter thick deposit in most areas. And so you'll be able to mine most of this with machines and very little physical labor. We've all seen these cost curves for the various metals. This is independent work from SFA Oxford, and so they've ranked us as the second lowest cost producer in the Southern African PGM market. The lowest cost mine would be Anglo American's open pit, which is just down the road from our project. The ESG, I know a lot of companies are reporting on ESG. It's a requirement in many cases. All of our ESG work was done as part of our mining right application and granting of our mining license, which was in 2021. So we've got a full permit to build. Our environmental impact assessment has been approved by the government, and we have our social and labor plan has also been approved. So when Joe talked about the permitting timelines for some of these critical metals projects taking up to 10 years, our mining right was granted in under 2 years by the South African government from date of application. Some key bullets from the feasibility study from 2019. I think the big number that everyone looks at here is the capital. So $617 million is the capital number we're looking to fund. And apart from the Japanese debt financing we're looking at, there is a plan to do a $300 million gold stream. And we've talked publicly about that. We haven't talked about who it's with, but it will be with one of the big 3 royalty streaming companies. And the other piece will be equity from all the partners in the project. So our share would be roughly about $100 million once we make a construction decision, and we expect all of that to play out in the second half of this year. There's a lot on this chart, but really it talks about productivity. Again, just alluding to what Joe said, the more people and the more material that you've got to move, the costlier it is, and the more impact you're going to have on the environment. Waterberg will produce about 35 ounces of PGMs per person per month, and the older mines are producing under 5 ounces per person per month. So the industry truly needs to go high productivity and low cost in order to survive. I think the big thing that we're really focused on right now is what's known as concentrate offtake. So as a junior company in the platinum space, you're producing a high-grade concentrate product, and you're selling that into the South African smelting industry. And so in order to unlock our finance, we need to have a formal offtake agreement with a smelter, and that's what we're currently focused on, and we expect to be able to announce a smelter offtake later on in 2023. And the timeline for construction, again, pretty shocked at some of the numbers that Joe was throwing out in terms of discovery to first production. Once we decide to build, there's about a 10-year development construction timeline to get this project into what's known as commercial production. And it's just the reality of these projects and the time required is it's about a decade to get a new project into full production. The last thing I'll talk about is another business we're investing in with Anglo American. There's a lot of discussion here about battery metals, lithium, cobalt, nickel, copper. We've invested with Anglo in Lion Battery Technologies, and we're looking to put platinum and palladium in next generation batteries. So these aren't your typical lithium batteries of today. We're focused on lithium sulfur technology, which is probably 5 to 10 years away from commercialization, but we're currently co-investing with Anglo and research being conducted at Florida International University in the United States, and we expect to have a commercial prototype for this battery later on in the next couple of years. And on capital markets share structure, as I mentioned, we're New York listed, about $200 million market cap. We've got some good shareholders, a large South African group, Hoskin Consolidated, Franklin Templeton in South Africa is a 15% owner, and Copernic, which is another US-based fund, is about 10%. And we are a member of the Standard & Poor's TSX Small Cap Index. And that's the presentation. Thanks to Joe for inviting us. Thank you.